Yeah, go ahead, shit.
All right, cool. So go
Before
ahead,
we get too
Steve-O.
deep into it, though, man, anybody in here still struggle with support and resistance?
A little bit off of Zoom with Jade, and she got me right, so I feel very confident.
Okay, so when we
Oh
ask you
yeah,
guys some questions, you guys are gonna
that
be able
was
to
that
answer
was you, Ruby.
questions.
That was Ruby on the 5 minute. You always use your
Yeah, that was
5 minutes to do your supporting or resistance.
no. I look at the 4 hour as well. Um, the 5 minute is really for when I'm day trading. So I was doing it wrong. I was totally doing it wrong. But we looked at the 4 hour chart.
Yeah, if you do your support and resistance on 5 minutes, that's too fast. You know what I'm saying? It'll fake you out a lot. Like I
Definitely
always
got to
do
start with
mine
the
on
daily.
facts. I
Yeah,
always
I
do
started with
mine.
then moved to the fourth. Then an hour.
Can you say that
Right,
again,
started.
Chanel?
I look at the daily chart and then I look at the 4 hour chart, then 1 hour chart, and go from there.
Perfect, perfect. Yeah, them the main two to them the most important to do your levels on. Especially with me, like I like to scalp and day trade. You know what I'm saying? So I do the
Yes, sir.
yes sir. J Money know what's going on. Take them small percentages, get in and get out, baby. For
That's
real.
that's the type of shit I'm on, man. Like I don't like to spend no more time doing the market, and I'm done. I don't like
And
spending.
like man, I was showing Jay yesterday. I'm not too big on the YouTube when it comes to stocks or whatever, but I love Ken and Gates. I mean Ken and Grace because he drop a lot of good knowledge when it comes to trading, investing, or whatever. He all around good, you know what I'm saying? And I was looking at his gains on spot that he did last week, and all of them like 10%, 15%, 20%. He ain't try to go for 50 or 100% on none of them, you know what I'm saying? And he a millionaire, so I'm like, you know what I'm saying? If he's still respecting the market like this, then what make me feel like I shouldn't respect the market like this? I'm getting greedy, in other words.
I'm saying, like, in all honesty, really in this market, the way we playing it right now, my whole motto is now with this market until I see a direction is just give what the market gives you and get the hell out.
Facts. And with
Right.
that, like I was telling Luciano, another thing we're gonna touch up on today is market trends because I don't know if everybody understand when the market is changing from a uptrend, downtrend, and a ranging market and a choppy market. You know what I'm saying? It's important to know all of those because you can know support and resistance all day, but you wouldn't know where to take profits if you don't know where what kind of trend the market is in, basically.
Right? I
All right.
agree with that. Like for me, I not been like the 5 minute and the 15 my scalps and day trades, and I look for my entries on those too.
You do your interest on 5 minute.
Yeah, I do my entries on 5 minutes.
You just made me feel a little more better, bro, because I'd be watching that 5 minute like a hoe.
Bro, you ain't do. I'll be doing that shit too, no doubt.
All right, I see Luciano is going live here.
Man, shout out to everybody that's joining us tonight. Oh,
One second, y'all. My bad.
yeah, though, I appreciate everybody, coming to the session.
Always, always. I gotta support the team. Always. When I seen I was hosting it, man, I hop on this shit real quick.
Man, I'm stepping out my comfort zone. This is something new to me, bro. Like I said, I ain't scared because I like to help people, you know what I'm saying? Seeing other people make money and getting better, that's a good feeling.
All right, sounds good. Looks like we got the video. So,
Yeah, we're gonna jump into the video. It's like 40 minutes, but we're gonna watch about 30 minutes of it and then we'll cut it off.
Hey, what's up, my friends? So welcome to the ultimate support and resistance trading course for beginners. So here's the thing, right? When I first started, right, in my trading journey, right, I learned about support and resistance, but I was confused, right? You know, there's so many support and resistance levels to draw my charts. Then how do I know when to buy and when to sell? How do I know when support will hold and when will it break? So it's after, years of trial and error, figuring things on my own, then I realized, how to really trade support resistance. So this is why in today's trading, I don't want you to, go through what I did. I have prepared this in-depth training for you to teach you, right, the truth about support and resistance that nobody tells you. How to draw support and resistance like a pro without cluttering, right, your charts with useless lines. I would say only 5% of traders, right, know how to do it. Then you learn how to time your entry at support with precision. So you only buy when the market is about to reverse higher from support, right, and not when it's going to slice through support. And plenty of charts and examples, right, so you can quickly master support and resistance. Sounds good? Then let's dive in. So what is support and resistance? Let me explain. So support is an area on your chart where buying pressure could step in and push the price higher. So let me explain how this would look like. So let's say the price comes down lower, then it goes up higher, comes down lower, goes up higher, comes down lower, and then bounce up higher again. So at this point, we can say that this is an area of support. This is an area of support, right? Because there's a possibility if it comes back down for a fourth time, buying pressure could come in and push the price up higher. So this is what we mean by an area on your chart where buying pressure could step in and push the price higher. Now, why does this happen? And the reason is very simple: self-fulfilling prophecy. Because if enough traders notice this phenomenon, right, they would expect the price to hold and continue higher. So for example, let's say stock ABC, right, it comes to the $10 support, bounce up to $20, come back to $10, bounce up to $30, come back to $20, come back to $10, bounce up to $20. So if enough traders pay attention to this, they'll think, this area, this $10, right, seems to be an interesting place to buy, because over the last 3 times, right, stock ABC has bounced off from $10, right, and hit higher from there. So if enough traders pay attention to the area on the chart, this becomes a self-fulfilling prophecy, and support becomes an area where buying pressure could step in and push the price up higher. So that's kind of like the theory behind it. So on the opposite end of things, right, we have resistance. This is an area on your chart where selling pressure could come in and push the price lower. So this looks like this, right? Price goes up higher, face selling pressure comes down lower. Try to break out above the highs, face selling pressure comes down lower. Retest a third time, face selling pressure come down lower. So at this point, we can say that this is an area of resistance on the chart. This is an area of resistance because the price has faced difficulty, right, trying to break out higher. So if it comes back up for a fourth time, this area of resistance could hold, selling pressure could step in and push the price lower. Make sense? So one last concept to share with you is this, is that when support is broken, it could become resistance and vice versa. So in other words, right, if resistance is broken, it could become support. So let me kind of illustrate this particular concept and then we move on to the charts. So let's talk about support. Let's say price comes down lower, then reverse, comes down lower, reverse up higher, and it comes down. Let's say at this point, right, you can draw this area of support, okay? Then say the third time, right, it didn't hold, it actually break below support. So you can see over here, this is previous support, previous area of support, and now when the price comes back up into this previous area of support, this could be now become resistance. This is where we can expect selling pressure to come in, right, and push the price down lower. And you might be wondering, hey Rainer, why is this so? So let me explain to you again the theory behind this. So the theory behind this is that at this point, right, when the price retests support for a third time, there are traders who think the price will reverse and bounce up higher from there. So they buy. Then what happens is that the price kind of didn't work out the way they expect. The price instead, went against them. The market went against them and they feel pain, right, as the price hits lower. Imagine you buy stock ABC at $10 and the price drops to $9. It drops until you feel very painful, right? Couldn't sleep, right? Couldn't eat, starting to lose weight. Then you see a glimmer of hope, right? From $10 down to, let's say, $2, and then you start to reverse up higher. $2 climb up to $3, $4, $5, $6, and back to your entry point at $10 over here. Over here, right, you finally, right, have gotten out, or rather, your trade has gotten back to break even. So previously, you were losing in the red very badly, and then hope came back in, right, and the market went back to the original price which you bought. So at this point in time, you tell yourself, man, that's enough. Let me get out of this trade. Let me, get rid of the pain. So you sell. You exit that long position. So when you exit that long position, you're selling that trade-off. You're selling stock ABC, right, back at the same price. So when you sell, this creates selling pressure in the market, and this is why we have the theory where when support is broken, it becomes resistance. And of course, that's not the only reason why the price should reverse at that area. There could also be other traders looking at this and thinking this could be another self-fulfilling prophecy, right? Because the textbook, the courses say, if support is broken, it could become resistance, and then they start to sell at that area. If enough selling pressure is out there, right, this previous support, right, could become resistance. And that's kind of like the two, or rather the few theories behind it to why this happens. Okay, so let's have a look at the charts, right, to see support and resistance in action. So, as you can see, right, we have a number of support and resistance here drawn on the charts already. But don't worry, right, I'll explain to you later on how I draw these areas or levels, alright? But for now, just focus on the concepts that I'm trying to share with you. So first one here, this is an area of resistance, alright? Price tested once, twice, 3 times, 4 times, 5 times. This is an area of support. Okay, price tested once, twice, came down. We'll consider this a third test, and then it hit up higher. So pay attention to here. Notice how over here the price came down lower and break right below this area of support. So previous support now becomes what? When price breaks below support, it now could become resistance. And we actually see this phenomenon over here. Price hit up higher, got rejected, previous support which became resistance. Then it hits down lower, retest this area of resistance, heads down lower, retest this area of resistance, and then heads down lower and then break right below this swing low. Consider this a swing low. Then you can see that again, right, the same concept, right? This swing low now becomes resistance over here, heads down lower, retest as resistance, then heads down lower, then pulls back and then heads down lower. And right now the price, you can see, right, retest that same area of resistance here and here as well. So right now price is kind of like, just in the middle of nowhere. So you can see this support and resistance, how these concepts, right, come together. So another chart, pound Aussie. This one is quite straightforward. This is an area of resistance, right? Tested once, twice, 3 times, 4 times, 5 times. This tested this area of support over here, here, and here. So after which you can see resistance, support. Another example, platinum. So if you look at this one here, you can see this is an area of support. And if you look back a little bit, right, you realize that previously this support is an area of resistance. So price breaks out of resistance, now becomes support. Okay, so you can see the same thing over here. Area of resistance, price breaks out of this area of resistance, come back, retest as support, and it heads up higher. This is a previous area of resistance, price heads up higher, comes back and retests previous resistance, which become support. Okay, so when it tests, right, when it tests these lows enough time, it now become, right, this new area of support. All right, so hopefully this makes sense, and let me share with you one more example before we move on. So over here, dollar against the South African rand. Area of resistance tested once, twice, 3 times. Area of support over here, tested once, twice, 3 times. Then again, pay attention when the price breaks below support over here. Price breaks below support, this area of support. Previous support becomes resistance. Then price hits down lower, right? Then comes back here, retest resistance at this highs, hits down lower, retest this area as resistance. Then kind of like hit down lower, break below this area of support. Previous support now becomes what? Resistance. Then over here, previous support becomes resistance. Then price hits down lower. So you can see this is pretty much how support and resistance will look like on your chart. You definitely need practice, so go ahead and watch how the price reacts at these areas in your chart. So now at this point you might be wondering, oh, sure, Rainer, all this looks kind of easy on hindsight. You already draw these levels, you cherry pick all these charts, right? So now the question is, how do I draw these areas of support and resistance on my chart? Well, that's what we'll cover next. Okay, now, so how do you draw support and resistance? So there are different ways to draw it depending on the market condition. So first, let's talk about drawing support resistance in a range market. So here's how you do it, right? Number one, you want to identify the highs and lows of the range. So for me personally, I like to identify the extreme highs and lows of the range because this is where you tend to get the strongest reaction when you trade support resistance. So I focus mainly on the key highs and lows of the range when drawing support resistance. So I like to identify the key highs and lows, the extreme levels. Then I'll adjust it to get the most number of touches. So I'm going to show you, right, what I mean by this. So let's have a look at a few charting examples. So you can see over here, this is the chart of silver daily time frame. This to me is an area of resistance, and then this is an area of support. So let me explain what I mean by get the most number of touches. So if I were to shift this on to the extreme highs, right, I will neglect this high over here. So I only have kind of like one touch over here. So I want to get the most number of touches. I will shift this down lower, where I have, you know, one touch and then two over here. Does it make sense? So same for this one over here, right? If I were to put my area of support at this extreme low, I will ignore this low over here. So again, I want to get the most number of touches. So I'll shift this up slightly higher, right? And you can see at this point, I have one touch, two, and three. In fact, I can push this up slightly up higher, right? And maybe even four over here. So this is how, or rather, this is where my area of support will be. And a quick tip for you is that for those of you who, as you know, right, support resistance, it's an area on your chart. But the way I do it is like I like to draw this extreme levels on my chart, the highs and lows, the extreme highs and lows. But I treat this as an area on my chart. So if you have difficulty treating this as an area on your chart because it looks like a line, one tip that I have for you is you can use this rectangle tool over here. Then you just highlight out this area. So again, just over here, just drag across and you have this area on your chart. Simple. So again, over here, same thing, right? If you want to use this rectangle tool, get as many touches as possible. So in this case, your area of support will look something like this. Make sense? Okay, so let's have a look at another example. So, right, so you can see this is resistance, this is support. Euro against the USD. So same concept applies, right? I like to draw my support resistance, right? For range market, I like to point out, right, the extreme highs and lows of the range. Second thing is to get the most number of touches. So at this point, again, this one over here, if I look back, this is probably just the extreme high. I will just plot it at this highs over here. Then for the low, I can get this one and this one over here, 2 touches. So I'll just adjust this one slightly, a little bit lower. Okay, so you can see that there are, of course, right, other swing points on the chart that I did not include. For example, let me just say, what about this high over here, Rainer? Or what about this low over here? Yes, I can see that these are swing points, but these are, to me, right, not the key support resistance area that I want to trade from. I want to trade right at the extreme level, the extreme highs and these extreme lows over here, because this is where I know I'll get the strongest, right, reaction from the market. So if you want to trade these levels over here, perfectly fine, right? You can probably go down to like a 4-hour time frame or 8-hour time frame, and you'll see that these levels are now much more significant. So if I go to the 4-hour time frame, you can see over here, right, this level here, over here, this highs, right, would be more significant, right, relative to when you saw it on the daily time frame. So again, since I trade primarily off the daily time frame, and when I identify support resistance, the key areas I want to pay attention to are the extreme highs and lows of the range. But of course, if you are trading off the 1-hour time frame, the 15 minutes time frame, you can go down to that time frame respectively and then identify the key highs and lows of that time frame that you're trading. The concept applies. And one last example, pound against the Aussie dollar. So again, support resistance. This to me is an area of support. This is resistance. I like to adjust it to get the most number of touches. This one, I'll adjust this down slightly lower. At this point, you can see, right, I have 1 touch, 2, 3, 4, and 5. You can consider this as 1 as well if you want to. There's really, I would say, no right and wrong here. So for this one here, I'll push this one slightly up higher. At this point, I have 1 touch, 2, and then 3. Okay, so of course, again, I will leave out a few minor swing points like this swing low over here and this swing high over here, because again, personally, I want to be trading the extreme highs and lows of the range. And I'll share with you why, right? So let's say, for example, price comes up into this area, this swing high over here. And if someone wants to go short, right? Let's say you go short. Let's say price comes down, you go short over here. You sell on the next candle open. Where do you set your stop loss? Do you reference it from this highs? Or do you reference it from this highs? Or from this area over here? You can see that, you're kind of stuck over here, because if you were to set your stop loss and reference it from this, let's say this highs over here, your stop loss is somewhere here, and the price comes up higher, you're technically cutting your trade right into an area of resistance, which doesn't quite make sense. So this is the reason why I don't like to trade minor swing points on the chart, because my stop loss, right, is usually somewhere at a level where a bigger resistance is at. So I'd rather just trade the extreme levels. If I'm wrong, I know I'm wrong, and I don't have to wonder, maybe I'm not actually wrong, right? Or maybe I should average into my losers down. No, don't do that, right? So now you get my point, right? This is why I want to be trading the extreme highs and lows of the range only, and all the minor levels, I leave it out completely. Okay, so this is how you draw support and resistance in a range market. So now moving on, let's talk about how do you draw support resistance in a trending market. Okay, so when it comes to drawing support resistance in a trending market, here are the two things I look for. Number one, I want to identify the 3 most recent swing points. I'll get to that shortly. And number two, I like to adjust it to get the most number of touches. So what do I mean by the 3 most recent swing points? So let's say if the market is in an uptrend, the 3 most recent swing points could be the swing low, it could be the previous resistance which becomes support, or it could be support itself. So let me just show you what I mean. So over here, let's say this is a trending market. How do I draw my area of support over here, right? You can see over here, I would probably have it at this level here, this one here, and then this one here. These 3 swing points is enough because from the looks of this chart, right, I know that if the market should pull back, right, it will likely come into one of these 3 levels. This one here, here, or here. And I don't need any more areas or levels on my chart. Why is that? Because if the market, let's say it comes back and retests this swing low over here, I might not want to be buying, because at this point, if the market can collapse down all the way down lower, this uptrend could shift. It could now be in a range market, or it has, shifted into a downtrend. Right? And if it's in a downtrend, I might now want to look for selling opportunities, selling into a resistance or selling at a swing high. So this is why, I don't have too many levels when the market is trending, because if the price could break these 3 levels that I've just drawn, if it breaks all these 3 levels that I've just drawn, most likely what I want to do is to be selling right at previous support, right, which could become resistance. I want to be trading in the direction of the trend. And because of that reason, right, this is why I usually have not more than 2 to 3 swing points on my chart, right, for trending markets. So again, same concept applies. I like to adjust these levels to get the most number of touches. So I will probably shift this to here, so I get 1 touch over here and then 1 over here. Same for this one here, I have 1 touch and 2 over here, maybe even 3 if I shift up slightly higher. Same for this, right? I have 1 touch, 2, and if you look back over here, this is 3. So let's have a look at dollar against the South African rand. How would I draw this support resistance, right, in this downtrend market? So again, I try not to have more than 3 swing points. So in this case, I would have, 1 over here and possibly 1 over here, and maybe 1 over here. Okay, so at this point, again, this will be the 3 swing points that I have on my chart, because again, if the price could head up higher and break out of this resistance over here, I don't want to be shorting this market anymore. I probably want to be looking for buying opportunities, because this is now where previous resistance could become support. So there's no point in me drawing every highs or resistance on the chart, because what's the point, right? Because if I want to be trading in the direction of the trend, I want to know where is the likelihood the price could pull back into, and then find trading opportunities there. No point putting so many levels on my chart where 95% of them I won't even bother with. Okay, so again, for this downtrend markets, I will likely have this 3 swing points on my chart, and the way I would draw it is again to adjust it to get the most number of touches. So this one I have 1 touch, 2 and 3. This one has 1, 2, 3, 4, 5, 6, right? This is where previous support now becomes resistance, and then this is quite a new one where price broke below this area of support, and then now this becomes resistance as well. So I have these 3 swing points on my chart. And one last final example, this is dollar against the Chinese yuan, and the way I would draw this is again, this is the highs, and this is the lows. So adjust it to get the most number of touches, possibly here, then this one here will take into account this recent low as well. So I have 1 touch, 2 touch. Here I have 1, 2, and 3. Okay, so this is how I would draw my swing points for dollar against the Chinese yuan in this downtrend market. And again, my logic is the same, right? Why not this drawing at this highs over here? Reason being is if the price can break out of here, I want to be a buyer, because this is where now previous resistance could become support. I want to be buying over here. I'm no longer interested in selling at this swing high or this swing high. No, I want to be a buyer, because now the market dynamics have shifted. And don't worry, we'll get to the trading strategy portion later on how to, you know, time your entries and stuff like that. But for now, I hope you understand, you know, the logic, right? Or rather, the science, right, to how I draw support resistance for this trending market. So with that said, let's do a quick recap. Number one, right, support is an area on your chart where buying pressure could step in to push the price higher. Number two, resistance is an area on your chart where selling pressure could step in to push the price lower. And when support is broken, it could become resistance and vice versa. In range markets, right, the way I like to draw support resistance is to identify the highs and lows of the range to draw my support resistance. And for trending markets, I pay attention to the 2 to 3 most swing points on the chart, and then I draw my support resistance slash swing high, swing lows, right, on the chart. So at this point, right, you have learned what support resistance is all about. And now the question is, you know, when do you buy? Because you don't want to just blindly buy at support because the market could slice through or break through support, right? So how do you know when the market is getting ready to move in your intended direction? So this is where I look for a confirmation, right? And I'll explain more in the next section. Now, let's talk about candlestick patterns because they are useful as an entry trigger. In other words, it tells you when exactly to enter a trade. So, you know, you want to be buying at support, right? Because there is an area where buying pressure could step in and push the price higher. But you have no idea when exactly at support, right, do you buy. So this is where candlestick patterns are useful. So candlestick patterns can be broken down into two categories. Number one is what I call the bullish reversal candlestick patterns, or the bearish reversal candlestick patterns. There's another one, right, which is indecision candlestick patterns, but we won't talk about that because it's not relevant to what we are doing over here. So let me explain further, right, what bullish reversal candlestick patterns is all about. So when you spot a bullish reversal candlestick patterns, it's telling you that the buyers, they are momentarily in control and the price could possibly push up higher, because I'll show you why, okay? So the first pattern that I want to share with you is what we call the hammer. So just to run you some basics, right? When you spot a hammer, this is the opening price, this is the closing price, this is the high. If this is a daily time frame, right, this is the high of the day, and then this is the low of the day. So if you see this on a 1 hour time frame, then this is the high, right, over the last 1 hour, this is the low over the last 1 hour, and yada yada. Okay, so what's significant about this pattern is there is a story behind it. So imagine this, right? Let me just, you know, redo it. Imagine the price open, right, at this price point over here. And then when the market opened, the sellers, right, took control and pushed the price all the way down lower near this lows, right? So again, assuming it's the daily time frame, pushing it near the lows of the day, right? So you can imagine, right, the buyers, right, they're getting smashed, right, by the sellers, you know, getting overwhelmed by such strong selling pressure. And after a while, right, you know, while all hope is lost, right, things are looking so grim, right, the buyers, they find the strength to push the price all the way up back higher, and finally closing near the highs of the day. So you can imagine, it's like a movie, right? You know, the good guys getting beaten, getting trashed, when all hope is lost. They think of their loved ones, they think of, you know, all the sacrifice they've gone through, and then boom, right, they come out, you know, Super Saiyan, and they start, you know, beating the bad guys, and the good guys win. So kind of similar to this pattern over here. This hammer pattern is, you know, buyers are getting overwhelmed, and then they suddenly took charge and pushed the price closing near the highs of the day. So this is what the hammer represents. This is the story behind it. And of course, the hammer isn't the only way to represent this bullishness. You have another one, what we call the bullish engulfing pattern, and the story is similar, but this time around it's a 2 candlestick pattern formation. So the first candle is a red bearish candle. You can see the sellers closing here near the lows of the day. Okay, and the next day when the market opened over here, okay, the buyers quickly push the price all the way up higher, and then finally closing near the highs of the day. So this again is a sign of strength, telling you that the buyers, they are momentarily in control. Now moving on, right, the opposite of bullish reversal candlestick patterns is what we call bearish reversal candlestick patterns. And at this point, if you're wondering, okay, Rainer, you know, but how do I make use of these patterns to trade the market? Don't worry, we'll get to that later on in the trading strategy portion, right? But for now, just understand the concepts, right, that I'm sharing with you. So for bearish engulfing pattern, right, the first pattern that I want to share with you is what we call a shooting star. So again, you can see over here, this is the opening price of the candle, this is the closing price, this is the low, and this is the high. So if this is a weekly time frame candle, then this is the high of the week, this is the low of the week, this is the opening price of the week, this is the close of the week. If it's a daily time frame, then you just interpret it accordingly. So what's special about this candlestick pattern is the story behind it. So let me walk you through the story behind it. So you can see over here, market opened at this price. Okay, then the buyers quickly took charge. They pushed the price all the way up higher, all the way up higher. And when the buyers thought, oh, right, win the war, right, things are looking good. Suddenly the sellers took control, right, and pushed the price down all the way down lower, closing near the lows of the day over here. So this is kind of like, you receiving, right, an exam paper that you thought you'd do badly. That you got an A, right? You say, wow, I got an A for exam, amazing. And it's only afterwards, right, you realize that it isn't what you think, right? It's actually A for absent. You didn't even turn up for the paper. So how can you get a good grade A? So this is where your world come crashing down. So same thing over here, right? For the shooting star, right? The buyers were in control, right? Thinking that they, on cloud 9, they have won the battle, only to realize that, the seller suddenly came back in and pushed the price to close near the low of the day. All right, and of course, there's another one. It's what we call a bearish engulfing pattern, a similar story, but this time around, it uses 2 candlestick pattern to represent. First candle, the buyers, right, in control, closing near the highs of the day. And on the second candles, right, when the price opened, the sellers quickly took control and pushed the price near the low of the day. So, right, in other words, right now, the sellers, they are momentarily in control. So let me walk you through a few chart examples to see how it looks like, right, in the real world of trading. So this one over here is Aussie dollar daily time frame. So let's see if you can spot, right, some of the familiar patterns which I've shared with you earlier. Over here is a hammer. Notice, right, this price rejection, how the sellers at one point in time were pushing the price near this low before the buyers stepped in and pushed the price up, closing near the highs of the day over here. Then over here we have what we call a bullish engulfing pattern. Notice how this candle's engulfed. It covers the body of the previous candle, closing near the high of the day over here. So notice this green candle, this green bar over here, this green portion, it has covered, right, the red portion of the previous bar. So this is what we mean by a bullish engulfing pattern. The body of this candle, has covered the body of the previous day candle. Okay, and over here we have I won't call this a hammer, this is what we call a Dragonfly Doji. So in candlestick patterns there are many names, but if you understand the story behind it, right, all these names don't really matter. If you look at the Dragonfly Doji, you can see the price opened at this price, then the sellers took control and pushed the price down near this lows over here. And then remember, right, the good guys, they always win in this case, right? So before the price suddenly reversed stronger by the buyers and pushed the price to close near where it opened. So you can see that for a Dragonfly Doji, right, the opening price and the closing price, right, are usually near the same level. Okay, so again, the meaning behind this Dragonfly Doji and a hammer is similar, just that they are different names because of the different closing price, right, relative to the range of the candle. So looking at more, we can see over here we have a bearish engulfing pattern. Over here you can see that this candle, it has covered the body of the previous day candle. This is what we call a bearish engulfing pattern. Then over here we have a shooting star over here. Okay, then this also, right, looks something like a shooting star, but this time around the shooting star, usually it's a red color body, but in this case it's a green color body. But you can interpret the story similar as well. You can see that the buyers at one point in time, they were pushing the price near these highs before the sellers took control and pushed the price lower, closing right near the lows of the day. So even though it's a green candle, to me it signals, right, price rejection of higher prices. And this is how you actually, use candlestick patterns, right, to interpret who's momentarily in control and then know, right, when exactly to enter a trade. And this is something which I'll cover right now. So now that you've understood, right, what candlestick patterns is all about, right, let's combine, right, all you've learned so far, support, resistance, and candlestick patterns, right, and find out how we can actually, trade the markets. Okay, now let me walk you through a formula. This is what I call the Tay Formula. This formula, you can use it, right, to profit in bull and bear markets and across different markets like, forex, stocks, futures, etc. So what is this formula about? So first part of this formula is number 1, trend. We are looking to identify markets which are trending, whether is it trending higher, uptrend, or trending lower, downtrend. Number 2, we are looking to trade from an area of value. So you've learned earlier, right, support and resistance, they are an area of your chart, and on your chart they are an area of value that you can trade off, right? So if the market is in an uptrend, you can look for buying opportunities at support. If the market is in a downtrend, you can look for selling opportunities at resistance. And the third thing we are looking for is an entry trigger, and this is where candlestick patterns, right, comes into play. You learn that candlestick patterns signals, right, whether the buyers or sellers, they are momentarily in control, right, and it gives you, right, a good idea to know when exactly to enter a trade. So to illustrate this Tay formula, it can be something like this, right? Let's say market in an uptrend, series of higher high and pull back, another higher high, higher low, hits higher, pullback, hits higher. So what you can look for is for a pullback towards an area of value. This could be towards an area of support. So in this case, could be this one here. It pulls back into this previous resistance, which becomes support, support. Then an entry trigger, you can look for something like a hammer pattern that you've learned, looking something like this. So when this happens, right, you can see that you have a number of factors in your favor. Number one, uptrend. Number two, area of value in this existing uptrend. And number three, you have an entry trigger telling you that the buyers, they are momentarily in control and the market could possibly, hit higher from here. So what you can do is just to enter on the next candle open. So let me walk you through a few chart examples and you can see how this formula is robust in the sense that there are different types of area of value that you can trade from. So first one over here is a Canadian against the Japanese yen. So walking you through, number one, what is the trend? Trend is up. Number two, where is your area of value? So if you can see over here, let me just bring back you in time. This is an area of value at this support area here. Okay, so number one, you have the trend. Number two, you have this area of support. And number three, do we have a valid entry trigger telling us that the buyers, they are momentarily in control? And if you look at this candlestick pattern, we have a bullish engulfing pattern, right? Look at the range, or rather the body of this candle. It has engulfed, it has covered the body of the previous candle. So what you can do is to enter on the next day open somewhere here. Okay, for stop loss and exits, I'll be brief about this, right? So for stop loss, usually we want to set our stop loss, right, where if the price reaches it, we know that support has broken, it has given way. So I'll say around the $85 price point is a good level to set your stops. And for targets, you can see that this is a potential, this is a swing high or this is a resistance. So you can look for targets, right, somewhere around the $88 price point. So this is again, right, how the Tay formula works. Now let's move on.
So you can't eat the whole thing by yourself? You can, but like it's like you can't eat the whole thing. But it's like a health or something? Yeah, it heals your health and your shield. Oh, then you can't eat the like that? No. You just got, but when you finish the whole entire day, but like when you finish.
Joined a couple times.
Hey, that's the only YouTuber that do stock technical analysis that I know got 1 million views on his video.
Yeah, the proof is in the pudding.
Facts. He really broke that down pretty simple, dude. I mean, anybody got any questions on that though?
No question is a dumb question.
Bet. Ruby still on here? Nah, she ain't on here.
Alright,
I was
so
gone. Let me share my.
I guess next we'll just jump into like a quick slide, run through it, just basically summarizing up like the video and everything. You guys can ask any questions and we'll be giving examples and stuff, and Steve-O's gonna go into more depth in a few things.
Now, yeah, Ruby's still on deck. She here.
Hold on, find it on my chart.
By them left court, you can damn near see the story happening before your eyes.
Yeah, y'all can see my screen.
Let me see.
I can see it.
Yeah, now I can see it.
Yeah, I just want to show her. I mean, when it comes to support and resistance, I mean, you know, everybody trade different. It depends on if you swinging, day trade, you know, scalping. But I just wanted to show you this part right here in the Candlestick Bible. It say the most important support and resistance level. These areas represent turning points in the market. if you can identify them on the weekly chart, you would know what's gonna happen, and the price approaches these levels on the 4 hour chart. Ooh, I'm high. But like basically though, I mean, it depends on how long you trying to hold your trade. So if you swinging, I guess you'll start at the weekly, then go to the daily and 4 hours, so you can know what's going on. You know, is price going down? Like me, I day trade, so the only thing I use is the 1 day and the 4 hour. Like the 1 day and the 4 hour, that's like a range for me. I draw trend line. I mean, I draw horizontal lines, and like I don't know if y'all seen when he draw them ranges and stuff, but the 1 day and the 4 hour support and resist for me, that's basically like that box. But before I keep going, I'm gonna let him go ahead and show the slideshow.
That is facts though, cause you establish the trend by looking at it as a whole.
Facts. I mean, depending on how long you holding, that's how far you go back on the timeline,
Big facts.
and just see what's going on at the support and resistance. See what the market really doing.
I gotta download them motherfuckers on the. Nah, matter of fact, I think I already got them on the laptop.
My bad, y'all. I'm trying to get it together here.
That
My
Candlestick
bad, y'all. I'm
Bible,
trying
that
to get
shit
it
look
together
like it's
here.
the truth.
Yeah, it pretty much give you little strategies that depend on what you want to do in the market. But before you decide what you want to do in the market, you got to know what's going on in the market. You got to know the market trend. You know what I'm saying? The price just ranging, then it's pretty hard to swing.
Right. They just bounced within that channel.
Facts.
Just like Spy did the other day when he was just bouncing in that channel. I forgot what day that was. That shit just stayed right in between them two levels.
I think that was Monday and Tuesday before Powell got to talking.
Yup, that motherfucker stayed right in that channel.
When Powell got to talking, it just finally broke down.
My bad, y'all. I'm trying to get it to share.
Nah, you good.
So do everybody know, like, y'all know how to tell when the market trending? Like, y'all know when it's in the uptrend or downtrend, if it's in the range of market or if it's choppy?
If you want to show an example, that might help some people out.
Right, I'll throw one of them charts up there.
Man, y'all know my chart be sloppy. Let me see. This something I'm working on right here. I'm pretty sure everybody know what this is, the head and shoulders. It's XLF 1 day chart. Anybody want to look at that? Let me see what I traded. Man, that's a lot to go into right here, right now. Let me see. But I did take this trade right here last week. I can break these down though. When I drew this right here and it broke down right here, I took this trade and I just scalped it from like right here. And right here, the market was just basically, this is what you call just consolidating right here, just ranging. So I drew this little wedge right here and it broke down. I took this trade right here and I actually wrote it down to this support. That's why I say I use my support and resistance level. Like this right here, this thick line, this is my 1 day. This little one down here, this is my 4 hour. That's why I say it's like it's a range for me. It's a little small box. And when it reversed right here and it broke back up this support level, I took this trade again and I rolled it all the way up to about right here. I got out because I ain't know what it was gonna do. It got small right here. I just basically take small uh percentages. It probably like 30% or something like that. And when it broke at the end of the day, I just waited and I just caught another trade at the end of the day. I think I played SPY. Man, I played a trade at 259 and got out at like 30 or 45 seconds with like $20. Like you could get quick money off SPY for real.
You throw the Fibonacci too.
Yeah, facts. Trace me. I guess this look like this was Monday and Tuesday right here. This a ranging market right here. We were just ranging. That's why I've been just taking profits from support to resistance, and then I do a put from resistance to support when the setup right. Like this right here, this a let me see. This here, this one of my favorite patterns. This like a evening star, and how I always remember buying the morning sale in the evening. So I caught this right here, and I wrote it down to support. You see off my line. I don't know how long I had these lines. I had them for a while though, but the market always come back and respect them lines for real. When you draw them, you really ain't got to take them off. Why people be like, "Why I got so many lines?" I mean, it always the market go up and down, up and down. So sometimes I tweak them every now and then, but most of them it's gonna respect them. But for the first 2 days though, that was my best days on SPY. I just kept riding from support to resistance, resistance to support, just up and down. Right here in the middle, this what you call chop. Like I ain't mess with it right here.
I think I got it going up and stuff. If everyone,
Uh
I think I got it up there. Can you see the screen?
yeah.
I see the slide.
All right, cool. So we're just gonna, excuse me, we're just gonna run through it briefly. I mean, real quick and stuff. All right, so it's basically, support and resistance. We're gonna move to basically support. Support's just an area on the chart where buying pressure can push the price higher. Support's an area where a price will bounce off of but won't break below. If a price breaks below support, then support can now become resistance. I mean, it's pretty straightforward. He gave a few examples and stuff on the in the video. If Steve-O wants to give a few examples of these, or if y'all want us to run through a few examples, we could, or if y'all just want us to run through the slide.
Pull up the chart.
Looking at my screen here.
I mean, I could pull up the chart if you want, or if you want to explain some stuff, it's up to you.
Okay. I got a chart. I'm just trying to go back to this candlestick bar right quick just to show. I guess we can we can just go to my screen. I don't need it.
Did you use the Bollinger Bands?
I don't. It just came with the trading wars
Okay.
with the indicator. Well, I just started you know what I'm saying? I just started learning about what I can say is like another support and resistance basically. Like, you know what I'm saying? it respect these levels too. As you can see on my chart, every time they get up there, it fall back down. When they get down there, it go right back up. It's just like another support and resistance. All of it is like confirmation. So I try to like stick to like 2 indicators now.
Nah, yeah, I used to mess with Bollinger Bands.
Like right here, this XLC and this I say this. Well, I ain't gonna say this. Everybody's favorite market. But like for beginners, this is the best market for beginners. You know what I'm saying? Because strictly because it's a bullish market. This right here is strictly as an uptrend. And every time it dip, these are like this how I draw my support and resistance.
Yeah, go ahead and show us.
I'm on a small computer.
So what you're watching right now is Steve-O's gonna just show you guys in real time. Well, not necessarily real time, but on a real chart where you would draw these multiple hits, just like y'all saw in the video, but maybe in a more recent chart than however long ago it was.
Give me just a second. I still want to show the book just in case, how I break it down is not,
I mean, while Steve
understandable for some.
gets his charts and stuff together, we could just like I'll just run through the slide real fast and stuff and read off what's on it. So yeah, that was support. Then you come over to resistance. Resistance is you can look at it as an area on your chart where selling pressure can push the price lower. Resistance is an area where the price will be rejected at and won't break through. If a price breaks above resistance, that resistance can now become support. And when you're drawing support and resistance, you kind of want to zoom out the chart, not just also like on the time frames when you're choosing like your daily or monthly. You want to adjust the chart itself and zoom out so you can kind of see a clearer and bigger picture. And then you want to and then that's when you want to identify the highs and lows, like explained in the video. Basically, all the highs of the days and stuff are dependent on which setup you have it on, and then you want to adjust your support and resistance to where you get the most number of touches. And then quickly, the Tay formula, basically a trend. You want to find an uptrend or downtrend. An area of value, you want to support or resistance depending on the trend. And then entry triggers, you want to look for bullish or bearish reversals. And using support and resistance to set stop losses and take profits. Setting a stop loss below the support to exit the trade if it breaks below support. So you want to you don't want to basically in my opinion it would go also what your stop loss could be, whether you want to go like 20%, 30%, and that's where you would want to place your stop loss under your support. And then you want to set your take profit target around resistance, if not a little bit above it. So you know whether you want to take 20%, 30%, 40%, or on what your risk tolerance is. And basically the takeaway of the video is just support and resistance is used to refer to a price level on charts that prevent an asset getting pushed in a certain direction. Support occurs when I'm sorry. Probably messed up on this part. And then resistance is just occurs when an uptrend is expected to stop due to high demand and selling pressure. So when we go over it in the charts, you'll see basically you'll find uptrends that bounced off of support and then they're moving up to a resistance, and then it'll bounce or be rejected at that price, and it'll bounce back down and then decide if it's going to be in a market trend or a downtrend, or it could break through the resistance. But from here, we'll go over to Steve-O, and Steve-O can go over some stuff on his chart.
Yeah, what I was trying to show here. Everybody on my screen. Switch.
Yep.
Yeah, like I was saying right here, like this is an uptrend market, and the uptrend market it goes up and then it dip and then it goes up. When it goes up, they call it an impulse move. Every time it dip, that's basically support and resistance. Even if you go over here and you draw, I have a lot on. A lot of people say it ain't good to have a lot of support and resistance line, but my one days are my support and resistance on my one day. Those key levels for me. Those the main levels I watch. And I watch the 4 hours for chop. Like in the candlestick Bible, it's kind of like the same thing. Impulse move and it just come back down, retrace. Constantly pulls back, impulse move. But it look better on my chart when it comes back. You can see the pullback, the support and resistance. It pulls back to that same level. But depending on what kind of market you in, as you can see out here, the market been crazy for the last week. But when you can spot, chart patterns, I can see easily here. This is a head and shoulders. So you could take this trade right here at the neckline, sell. You could have rolled it all the way down here. This would have been a perfect example for a swing play.
Hey, bro, you say what pattern is that?
Head and shoulders. I'll show you.
Hey, do this. Hey, slow down.
Hey, your mic hot.
You can see me.
Look, mama, get your head done like that. That's she got locks in.
You can see me, bro. Oh, that Miller that asked that.
Yeah.
Yeah, see, basically you take from the low, come up here to the high, come back down to the low. That's the shoulder, right? The head, for it to be a head and shoulder, the middle one always got to be the tall one. Like our body, the head always bigger than the shoulders, with above.
Okay, I see you.
I, I really probably took that down some, but come back. I just put it right here, cause basically right here, me when it broke this right here. But let me zoom in, son. You can see it better. Once it broke this right here, bro. See this right here. This is a double top. And then it come back with a shooting star right here. That's all the confirmation I need. I let the counters close though. So on the daily, I would have let it close. Then I would have took the trade down once it broke below that counter, that shooting star right here. So on the daily, that's what I would have swung. I don't do too many swings though. I like to get in and get out. You see what I'm saying on the head and shoulders?
Yeah, I see you. I see you. That's tight how your shit spell it out though.
You got it on your trading view too, bro. You
That
just go over
motherfucker.
here to the patterns. That's how you can confirm your patterns that you got.
Okay.
Maybe we can help him out
Yeah.
a little bit later on.
Yeah, I got him for sure.
Right, because
But
motherfucker could have rolled that down because that dropped from what? The entry would have been what? Right at
right below this shooting star on the next day. So that's 75.47. I mean, even if you only held it for 2 days, you know what I'm saying, you could have got it all the way down from that $75 to 72.22. Man, it got as low as 69.50. That would have been a hell of a trade. Me, I'm switching over. I'm gonna follow J Money to get better with Spy next week with that $100 trade. I feel like everybody should look into that. 100 to 1K for sure. Let me see.
Does anybody have any questions or anything they want us to show them?
Let me go back to what date this is. October.
yeah, bust down some spot charts.
Just wanted to take note that now Steve was showing the 5-minute chart. So before this, he was showing the daily chart, which obviously takes a little longer to create a candle because each candle represents one day. So it may be a little bit easier to practice your recognition of support and resistance as well as candlestick patterns on a daily because you won't be racing against the clock as much in comparison to like what he's about to show you here.
Still won't let me. I was trying to show it from when I drew. I'm gonna have to just do it on the. Mars won't let me go back that far. I'm gonna have to draw recent support and resistance. So boom, like basically every time it dipped, that's why I draw my. That's the major support. That's why I got the thick lines here. Let me show how I draw my support. My support and resistance.
So because you see there's about 4 candles that hit that orange line he just drew, that's why he put it there.
I always put it where the most candles touching to. As you can see, it's gonna always come back and touch this every time. Even if my support and resistance ain't perfect, on all of these candles, it touched it. So I know it's resisted though. It got major wicks on it. The wicks, that's when the selling pressure kick in and kick it all the way down. This,
So Steve was sharing his screen as well as
crazy. I
Luciano.
don't even have to I really don't even have to draw. I never played this, but this is something I've been looking into. I never drew support and resistance on it, but I really don't even have to on the 4 hour because it's still respecting the same level. So that's major support and resistance. But I put small levels right here because a lot of times on the 4 hour you look for chop. I think I had it on one of my charts. I don't remember. I got a lot of stuff, y'all. I'm sorry. This was actually me live trading. on the 5 minute last week.
Don't tell me how to eat
Ooh, IW.
It's dinner.
Oh, okay. So yeah, just like on Spy, like I watch out for stuff like this. That's why I got a small level right here on this one as well, as you can see.
But first I want to make it. I have to make it my way.
That's why I have two small levels. Like these, my little 4 hour ranges right here, and I look out for this right here, cause it's the small levels. But Spy, it moves a lot. My key levels with last week was from 437 to 427. Well, it broke above that. I don't have a lot of levels on it. I got up there to it. But do everybody know how to spot reversals?
Hey, Steve, I see Luciano's plotting Spy right now. If you want to let him see if he can explain some things.
All right, motherfucker, let's see what's up with them
Yeah,
reversals.
I got a million lines on spy.
Luciano, if you want to talk, you can unmute yourself. Explain a little bit of what you're doing.
I had to take my lines off to explain spy because it'll confuse people.
Oh my goodness.
So yeah,
Yeah, these are all the highs and lows.
I just was just playing around with the charts, looking at it. So I have SPY pulled up, just like putting a few of the stuff that I would learn from like the video and stuff, and just kind of looking at it. So like this is kind of like a if I'm not mistaken, this is a trending market, or not a trending market, but a what was it? Excuse me. A range market, my bad, John. Because as you can see, it's trading sideways, and then I put my right here resistance at around 429, and it's on the daily, the 5 minute, and I put my resistance at around 441 because that's where I had the most amount of touches. As you can see, 1, 2, 3, and then over here 4. And then for resistance, you got over here 1, 2, 3, and as you. But I mean, that's pretty much what I'm looking at. I mean, if y'all have any questions, I can answer y'all questions and show y'all stuff based off of any questions y'all have.
That's basically what was going on last week in the market, though. Ranging, well, especially the first 2 days, and went to down and uptrend after Powell got done talking. But I learned my lesson. I won't trade until he done talking. That's a discipline rule I broke, and I'm sticking to it. While he talking, I would not trade until he get done.
Maybe we can start on TradingView. We can probably like note the day and time and be like, when this time comes up, Powell is speaking. Also, for everyone that's here, if anybody wants to like go ahead and share their screen, maybe we can walk you through one. Go on ahead. Let us try to use you as a little guinea pig to help you out. Make it a little more understandable than just staring at us do it. If anybody
But
is in.
I'll say this. Did anybody have any hard days in the market last week? Like besides discipline? 'Cause I know we all struggle with that.
Big facts.
If nobody wants to step up, I'll step up. Let me get my trading view that I don't use. What you want to teach me, Steve-O Spy?
I trade IWM more.
All right, let me put up IWM.
You doing the $100 challenge with J Money next week?
I don't know. We'll see. Whatever makes me some money, you know what I'm saying? All right,
I trade
Steve-O.
IWM because I always pay more attention to the small caps. That's what I was used to. And
All right.
another thing about IWM is more diverse than SPY. Like it got its hands in a lot of different sectors. You know,
All right, I'm
Russell.
sharing my screen. So, Steve-O, just walk me through as if I'm completely new. What am I doing? What candles do you want me to start off with?
Just a second, please. Steve-O, you were saying IWM has its hands in more sectors than SPY?
Yeah, it's way more diverse. You know, SPY got his hands on the top 500 companies, right? But the
Right.
Russell, it's 3,000 companies in all. Even though the IWM is the Russell 2000, so it's way more diverse. It moves with it because it's the small cap, but sometimes it can move without it. It get more movement than it sometimes.
Thank you.
Yep.
For sure, for sure.
Hey yo, Steve-O, would you say that
All right, Steve-O,
IWM
what candles are we starting off with here?
What you saying, Supreme?
I was saying, would you say that IWM is less volatile than SPY?
No, no, they pretty much move the same. It's about the same.
All right, but
But you know what I'm saying? When it comes to SPY, if SPY move first and IWM ain't move yet, you know, if the big caps ain't holding up, then I automatically know what the small caps gonna do. That's just like in the bear market we in now. It's getting beat down as you can see on his chart because it's the small cap. Like I scalp though, so I make money on the call and put side. But as far as I wouldn't recommend to swing it either, just like SPY. Like right now, I'll be looking at what's going on. I will say this: if you look at my chart, well, you go, Danny, you still on your screen? Everybody looking at Danny's screen?
Yeah, he on IWM, right?
Uh, type in ES.
ES.
Yeah,
All right.
ES1.
ES1.
Yeah.
All right.
See what's going on real time. Go to your 15 minute.
All right. So we're going to the 15-minute candles. Want me to zoom in on the past 2 days or something?
Nah, this live right now.
Oh, okay.
This futures SP. You can zoom in over there to the over there all the way towards the right to like where we can see the candlesticks.
That'll be dope. I'm working. Why is this so wide? Okay. So
Go
this is
all the way
looking
to the
confusing.
top. I mean, everybody probably can see what pattern is making right now. It's a
Right.
flag pattern is making.
yeah, I was about to say I like that.
That's definitely
So
a flag.
so this would be your flag here. I know this isn't exactly where you need to draw the line, but just for quickness sake, this is your little flaggy. And then this big rise here is your pole. And then also if you guys notice, this is also a resistance, right? Because there's many candles that kind of hang around in this region, and usually it wouldn't break it, but this
Even
pattern right
though
here is a good representation that it might break it this time instead of coming back down.
even though that is yeah, I was just finna say it might not break it, you know what I'm saying? For one, it's a double top. If you look from where it's at now to where it last was,
Mm-hmm.
and if I look at it, the first two on the other one on the flag, that kind of like a yeah, that's a double top too. It's a bearish double top, and it's breaking down right now.
So right here, these two candles,
Yeah, that's a double
red and
top. And
green.
you can see up there at the top how it's touching.
Right.
Yeah.
So you would wait right now for confirmation to see whether it's gonna go in an uptrend or a downtrend.
Facts.
So right where Danny had his arrow at is kind of where you would want to wait for it to either break down to see if it's gonna go in a downtrend.
Right. So because it's at a resistance currently from the past few days, this is a perfect thing for what Luciano was just saying. So yeah, usually if it happened around here or something, then you may not want to put your notice of up or down because it may be a fake out or something like that. But because it's at this critical level here, if it were to fall down, then it's going to follow the way it did here, right? And if it were to go up, then we're in a whole new region and it may just keep going. So this is a perfect time to put your little indicator lines.
And if y'all
So
can
for like
see right there before it had the quick run up, how this
like that,
green candle
something like that.
basically engulfed this and we took over the red candle. So right there, that was your bullish reversal.
Where was it at, you said?
Right there around the 430 4 was it 43.30 mark at the bottom. That was your bullish
Okay,
reversal before it
right
went
here.
in the uptrend because that green candle took out the previous candle.
Right. Yep. As he said right here. Breaks it. Boom.
Another thing,
So you
another
might have
thing
wanted
I can
got in
say
around the
about
second green candle, got in and then wrote it up.
my opinion of it though, I feel like it'll break down from where it's at. I don't feel like it's a bullish flag just off the point that I trade, you know, triangles and wedges. If
Mm-hmm.
that's like a descending triangle, you see the high is constantly getting lower and the bottom is pretty much flat, you know what I'm saying? That's usually bearish price action. You see how the candles getting how they went from big and they constantly getting smaller in there? If it break down, then I'll get in that trade, but I'll let the candle close if it was live action.
I have a question about the reversal.
Yeah.
So, would you wait until the second candle closes, or would you get in on that second candle?
You talking about from where is it now?
No, the bullish engulfing at the bottom.
I would have waited till
Like,
about the second candle,
yeah, I was wondering.
depending on what you're watching it on. So we looking at it on the 15. I would have waited for the second candle to get in and
To
then wrote it
close.
up
Yeah, that's it.
just
I
for
done got hit so
confirmation
many
because
times.
it could have psyched you out and you could have got in on
Facts.
that the first green candle and it could have went up real quick and then just after the second green candle dropped back down if it,
Yeah, what I was wondering is on the second green candle, do you wait for it to close or do you enter on that candle?
On the break above the first one.
yep.
Yeah.
So
But I get what you're saying though. Sometimes me personally, Yeah, sometimes I let that second candle close because it can end up going below that candle and end up
Yeah.
becoming red. You know what I'm saying? A lot of
Right.
times now I learned to let that that candle close, and how he got his support and resistance right there. I would have waited till it broke above.
Because it could have traded sideways
Okay.
there
Yeah.
also too.
I would have let that one close too. The one that's above, that's probably when I would have got in that trade because that was resistance. So I wouldn't even got in on that third candle.
So just another.
Just me being cautious
Yeah.
because the past few times it wicked off of it. That's just me being cautious.
I think
Oh,
another good note to is that for the second candle, if it never touches, let's say half of the body of the previous candle, so like this first candle, it's like right at the middle here. If it never even comes to this level, then it's probably a good sign to just jump in. Maybe wait half the time or something like that if you want to be safe or something. But that may be a good method.
I wouldn't just say that because it depends. If it break above it though, if it's an inside bar, I wouldn't. 'Cause if it's an inside bar, it's consolidating and it can break down. But if it break above it, then yeah, I will.
Yeah. So
And you can
because
see the volume increasing too, right?
Yep.
That's
So
another
that's
thing
more
I would have looked at.
confirmation.
The volume's increasing with the green candles. Also, they're approaching your resistance level with a strong move. Like you have really big candles approaching your levels as well with the volume together.
True.
That's how I would have looked at it as well.
Yep. And then once that first green candle took out the resistance, that was kind of confirmation for a breakout right there because it was a nice green candle and it had a long wick too.
Yeah.
All right.
Volume dead right now too, so it's gonna be pretty much just consolidating.
What's that? The futures pulled up.
Yeah.
Yep.
But if then you go right there to your left,
On left,
go up, go up.
go up
I already said that's the evening star, huh? Was I on my chart when I was talking about the evening star?
over here somewhere.
Go to your right.
Okay.
You right there by it. Go see that
This way or this way?
right there to the left, right there where you at.
Okay.
Them three red, I mean the green, then the red, and then the other red one. The green and two
Okay.
reds, right there.
Yep.
Me, I probably would have took that trade too. I probably wouldn't have. The only reason I wouldn't have took it because it's consolidating up in that range.
Right. Well,
No,
if we
I would
replay
I
it
would have
back,
took it. I would have took it because it was on the uptrend. After that uptrend, after them two counters closed, and that one, that's the perfect example. Matter of fact, when I said like if it was an inside bar from right there, where is it? If that green one, go to that fourth counter.
mm-hmm.
If that was an inside bar, then I wouldn't have touched it because it could have went back up. But since it broke below that counter, I would have got in. And how it's consolidating right now, that's just a perfect example of like don't let the counters fake you out. Like look what the counter's doing right now. It was wicking off of it. Like go to the right a little bit. See what the wick said on the resistance. That's the perfect example of like let the counters close and like don't let it fake you out. Cause you would have made your money on the way down. Like it fell all the way down below support. You could have easily scalped a little money off of it. That's the perfect reversal. That's just like my IWM chart that I showed earlier. That's exactly them two plays right there was like the two plays I made Friday.
So I changed it to 5 minutes to zoom even farther in.
Yeah, that's the chart I play on.
Right.
See on that after that second candle close, that second red one. You're right. Oh
On this
yeah,
one.
right there. After that one closed and it after it kept wicking off that resistance, that's when I would have got in.
So let's say you saw this wick right
And
here.
look, go down to the bottom. That's just like what I was talking about too. Yeah, you see that that inside bar?
Right
Got
here.
an indicator on mine, but that's the inside bar. That's what you call bullish price action. You see how it went up?
Yep.
That's why I said the big one that you had, and they had the inside bar at the top, it could easily drop down. That's why I let it break above. But that's an inside bar. You see what happened? It ain't keep falling.
Mm-hmm.
End up going up. That's a reverse as well.
Wait, G. So you saying after that red bar, after that red candle hit right there, wouldn't that be a like one of them hammers or some shit like that or nah? Because you see how I got the stem, you see how I got the wick.
Oh, facts. That's an
How the
inverted
shooting
hammer
star.
too.
That's a shoot.
You
Yeah,
see how the wick right there at the top, but then it's got like that, you
that's
know what
a.
I'm saying?
Talking
That
about the
hammer
Somebody
green
said
type.
one.
it in the chat. It's a shooting star. Somebody
It's a
pointed that
shooting
out.
star.
The green or the red.
The red
Uh,
one.
This one right here.
The one that just has
Yeah.
the. Yep.
The one with the long wick.
Yeah, yeah.
no, not
The
that G.
one, the one next to it, but behind it,
I'm talking
This
about
one.
right
all the
there.
way.
Yeah.
No,
Oh,
Yeah,
I'm talking
that's
about
the
at the
shooting
bottom.
star, right?
that.
I
Yeah.
can't
At the
see.
bottom.
I'm talking about at the bottom, right when that, right when you just said that was a reversal, right when that shit dipped,
Oh, facts. Yeah, that's
and
an
then
inverted hammer. That's another bullish reversal.
that's what I'm trying to say. Once it enclosed right there, because you said that's an outside bar, right? No, an
Inside.
That's an
inside bar,
inside
right?
bar.
Right.
That's
So
one confirmation of bullish price action.
and
Second
then with
one, the
the
candlestick, the inverted hammer. And then if you look at the next two after of it, that's a morning star. Man, that
right,
was like
so that's the morning star right there.
Right.
the inverted hammer. Then you got the doji, and then you got the next bullish candle.
And then from there it just went bullish.
Yep.
Yep. And you could
After
probably
those
carry
three
it all the
colors,
way
I
back
would have
to
took the
this
green
line
trade.
right here.
Okay, so then what was so then all right, so that's the reversal up. So then keeping what was about to happen right before it dove down though, cause I see it got that green candle and then the next what 1, 2, 3, 4 damn it 4 candles after that just got red type.
Right.
No, to the left.
That first one.
No, to the left before it dipped down.
Okay.
Yeah,
Right here.
yeah, up there.
Like Tamara was talking about. I think that's who that was talking. I'm pretty sure that's who it sounded like. But
Yeah, that was me.
she's saying right there the calendar he on. That's a that's a
The one before it, right when
This one.
that,
Yeah, that one.
yeah, that one.
fact. They both shooting stars.
Yeah, both of them. And the wicks kind of give it away that a reversal is coming. They're rejecting that line.
Right.
Right, okay, that's what I was trying to, you know what
So
I'm
this
saying?
this candle in comparison to like these two
Mm-hmm.
candles here,
I
what
hear
would
you.
be the reason why you wouldn't come in start in here instead of waiting for this candle?
You hear me?
Yeah.
Cause it's just consolidating.
I rewinded this and none of this stuff here didn't exist. You'd see this candle as consolidation. This candle right here.
And I would
Yeah,
think because it's a
that's
sideways action.
about the doji.
Yeah,
Yeah,
this
that's
one right here.
because the buying and the selling pressure even.
Gotcha.
Nobody.
And then,
It's like tug of war. It's even weight on both sides right now. Nobody winning.
gotcha. So you wait after this one to see
I
how it
wouldn't
reacts.
on that trade there. I wouldn't have took nothing that's on that resistance line. I would have waited until a candle closed it off of it.
Right. So like right here.
After that close right there, after that shooting star, that's when I would have got
Right.
in.
So
Because
like
that
right,
wick, that's a major wick on it. So
so
that
right
means the
there.
selling pressure, huh?
I was just saying. So right here is probably where we'd get in.
The second candle.
Yeah,
After
right where it starts, and then write it down.
after it
You
break
see the,
below it. For
and then you
me,
see this
like I was
inside bar.
saying, just
Go ahead.
because that one's still on the resistance line, I would have let that second candle close too. That's something I had to stop doing. Cause if that candle don't close and you take it soon as it break below, it could break right back up above it
Mm-hmm.
and go up.
Gotcha.
It's just more confirmation for me.
So you'd start on this third candle here then.
Yeah.
All right. And note that we're on the 5-minute chart, by the way. So you might want, if we were on the 15-minute chart, you may be able to start a little earlier. But since we're on the 5-minute, we have where you can afford to wait another 5 minutes for better confirmation.
Yeah, exactly. But because I trade on the 5-minute, I look at the 15-minute chart, see what's going on. I look at the 1 hour chart, see what's
Right.
going on, and I look at the 4 hour.
Gotcha. So are people seeing what we're seeing here?
Does everyone understand what we're talking about, what we're discussing?
Yeah. Hopefully, our names for candlesticks isn't getting too convoluted for some new people.
Anybody got any questions?
How do you know when the candle closes? So you'll see. So this candle right here it's a 5-minute candle. So it'll start at, you see the time down here. It says 1920. So it'll start at 1920 and then it'll finish or close at the next interval. So 1925. So once this closes, this candle will start drawing itself at 1925. Now the reason this is red instead of green is because it means when 1920 started, this candle started drawing way up here where my cursor is. Sorry, where my cursor is, and then
it down.
Yeah, and then near 1924 or 1925 in the time, it ended down here. So that's why this turned into a red colored candle. And then when you get to 1925, it starts down here because that's where this previous candle ended. And then you can see that as the 5 minutes went on, it started down here and it went up. So what this long wick represents is that it started down here, got all the way up to this point, and then it came back down, but never fell back down past where it started. If that makes sense. So it started here, went all the way up to here, maybe at like 1923, and then it came back and it closed at this value right here, slightly above where it. So then the next candle, you can see it starts the same line, it moves around a lot, and it finally ends slightly below where it started. That makes sense? All of these take place within just 5 minutes. Yeah. Yes, that's what this thing right here means. That every candle represents whatever time frame you click on. So when you hear people say the hourly or the daily, they're just mentioning how long a candle is drawing.
You can
So when you look at
go back
this
to the
chart,
5 minutes, see how much time on it. If it's close, you can show him right quick. He'll see it close. How much time on the live action?
What do you mean? Right here.
Almost before that candle close. How much time is over there to the right?
1 minute and 20 seconds. So yeah, that's on trading you can see where the timer going down. So you'll see when the candle's gonna close and it's gonna move on to the next one.
You mean down here?
No, on the
Oh, right
side
there
right,
to the right.
the green box with a timer.
Green box.
That's how you know when the
Right
candle
there.
about to close.
That's the 15-minute mark. So when you adjust your time frame, that helps you with the 1 minute, 3 minute, so you can watch the timer go down, so you know when the candle's gonna close.
Gotcha. So right now we got 40 seconds before this green candle closes.
Yeah, I'll be watching it like that too. What, the computer be hurting my eyes.
Hopefully that makes sense.
As soon as
$1
it closes and it's going in my favor, I'll take the trade.
How'd you get the little timer thing on TradingView?
Yours don't got it?
Nah, I'm disappointed.
Go to type in
Don't ask
ES1 on yours right now. It should show it.
What is it?
Type in ES1, the same thing he on, cause it's live right now.
That might be it, yeah. Because this is running right now. You might be looking at a chart that's
It's
only on.
futures. Some people trade futures.
And futures runs every day.
Did you find ES1 tomorrow?
Yeah, I think this is it. It still don't have the timer thing though.
Still?
So if y'all look at my screen, y'all can see it. I have it on the 1 minute, and you can actually see the candle go up and down as buying pressure coming in, and then people buying and selling, or within that 1 minute candle.
I wonder how yours don't have the. Mary, send me a screenshot of what yours look like, and I'll help you.
Okay.
So Steve-O,
Because that shit should be automatic.
Person asked what are futures? I guess like the definition, if you want to explain.
I still don't know about it myself, but that's something I want to get into trading in the future. I know futures is bigger than the stock market, and you can make more money on it too by the simple fact that in forex they don't got theta, like they don't have time decay on their money like we do, but it's more riskier because of the margin on it. You can lose more money that you put in, but you can also like make way more bread. Like you can stay in that trade as long as you want. But I'm still learning about futures myself.
I always thought of it as like, see how for Steve-O's thing it says
Lady
S&P
Supreme on
500.
her, I think she traded futures before. You traded futures before, Lady Supreme?
Maybe she can't hear us right now. But
Plus, it's a good indicator for SPY too. Tell them about SPY. Tell them about SPY.
Facts. If you get up like 7 in the morning, 8 in the morning before the market open, and you see what it said right here, it's gonna let you know a SPY gap down or gap up in the morning.
So the way I see it,
that's why SPY be gapping up and down because of futures. That's why I watch this when I'm watching SPY. Well, in the morning before the market open, because SPY gonna do whatever level this at.
Wonder if there's like a description. You can just look it up. It's got like a legitimate definition.
She said she traded it before. I'm scared of futures right now because of the margin. And with the margins, you gotta have like a certain amount of money with those brokers on futures. You gotta have like at minimum like 1,500 to even play, just to play like 250 because of a margin account.
Right. So from this description, it doesn't seem too much different from what we already do. It's just a different.
One thing I will say though, when it come to forex futures and spot, I mean forex futures and the stock market, the hardest one to trade is option trading, which is what we doing. So if we could get down the stock market trading options, you can trade forex, you could trade futures. It's certain other newses and stuff you're gonna have to watch because it's a different sector. Like the forex chain, they gotta watch different stuff with different countries and stuff.
I'm gonna go ahead and stop sharing my screen. Let y'all show your screens.
I guess it is flagging up. Look like it's trying to flag up, huh?
Shit, Lady Supreme say the futures are basically trading on the contract to hit a price by a certain date. You can trade damn near everything. The only thing with futures is that it's way more risk. With options, you can only lose the premium. With futures, you have to trade on margin and can lose way more than you put in.
Facts.
Yeah, so no thanks.
But if you learn how to trade futures, you really could bank off of it. I see a lot of people
Right.
banking off of futures. Like I'm talking like 10, 15,000 in like 5, 10 minutes.
Gotcha. Yeah, she said stop loss. So if you get your practice on with stop losses, then you should be fine. This person got the question. Options and forex.
The similarities basically is like the most important part of trading it is like looking at the chart, see what's going on. If you can read charts on whatever you trade on, it's the same thing for the whatever else you move on to. So if you know how to read charts, it's just like we reading this chart right here. I don't play futures, but I know how to read it just because I read charts with the stock market charts. It's the same thing basically when it comes to and it's just buying and selling, identifying patterns, candlesticks, utilizing your time frames. It's the same stuff. Then they gotta watch news. They also gotta watch out for power because when it comes to forex, stocks, and all that, everything in the world run off of business, money. So I mean, they watch out for power too when it comes to forex when he talking. Right there where your mouse just was at, that was a nice head and shoulders. Anybody got any more questions?
The Candlestick Bible. You know where I can find a PDF? Or where
It's
It's in the homework help.
Okay.
I'll post.
Thank you.
Yeah, I mentioned it. It's pretty recent, so just go there. I'll type it in there.
I found it.
Yeah, I like to give people my knowledge just off the simple fact that even if you don't know what I know, it help. I done seen it help a lot of people to get past me, and like I like that because it's really easy. We just got to be disciplined when it comes to this. That's my biggest problem. That's one thing I know about myself. That's why I follow the percentages now. 20-30% me.
All right, I think Steve-O, Luciana, you got some questions for them, right? Before we wrap it up.
Steve-O, you got any questions? I mean, other than, not really no questions. I mean, we could just pretty much wrap it up. I mean, support and resistance pretty basic. So I know a lot of you guys understand it and
Somebody
everything.
just asked a question. They said, "Are there certain patterns or candlesticks that you notice were most important to learn for starters?" For me, my favorite ones are the head and shoulders, inverted head and shoulders, bullish flag, the bull flag. Oh, if you get the candlestick Bible, it's a lot. It's a ton of candlestick patterns in there and chart patterns. But the most successful ones for me been like, well, I draw wedges and triangles a lot too. But when it comes to patterns, I like morning stars and evening stars. That's really my favorite one, morning star, evening star. That been the most successful reversal for me so far.
All right, I just wrote it in the chat, just in case people didn't hear it. So that's Steve-O's top 3.
To be honest, I don't really use like the patterns. I just use the support of resistance and then just kind of find the trend that it's doing, what's going on. Kind of look at the 5-day, the 1-day. But Steve-O gave me the Bible too, so I think I'm gonna actually dive into it and see what I can take from it and see if I could apply it to my trading strategy.
So, one last one that I would add on to Steve-O's is looking for inside bars. So where the next candle basically is engulfed by the previous candle, the body of it at least.
Hold on. I can show a couple of them on the screen right quick. I go to.
Sounds like a good idea. That can be our last thing before we head out here. And if you guys have any suggestions on what you are interested to hear about next week, we might be able to set something up.
Yeah, if y'all can just like drop some suggestions on what y'all like are having trouble on, or like any specific topics to go over. Like if y'all want to go over candlestick patterns, then we can put up like a little lesson plan for that and explain more in depth the names behind it and stuff like that. Or Whatever
Yeah.
y'all want to, the Greeks, if y'all want to go learn about the Greeks, if y'all don't understand the Greeks or how they apply to options, we can put up a study plan for that and we can explain that. Whatever y'all having trouble with, just drop some comments and then we'll go off of that and we'll put something together, run it by you guys and see what you guys think.
I always tell people, like,
And if
I ain't the
anybody
best
needs some of these
explainer,
books,
but
no, I was just saying if anybody needs some of these books, I got the PDF files if they not already in the. Well, shit, I could just drop them in the
Homework help.
education thing. Yeah,
Yeah, you can
Drop
have
all
them.
of those so everyone can get them.
read
yeah.
that Candlestick Bible book, man. Anybody can come up with that. It break it down. Trading just simple, just plain and simple. You just gotta
Yeah.
stay disciplined.
We could even somebody thinks this is a good idea. Uh, I'm assuming y'all are gonna grab the Bible in the homework help section. We can go through one of the chapters next week. Everybody read it on their own, and then come into the study room. We can discuss it. And
Okay.
since Millie
That'd
has
be
that
great.
book and he's probably been reading it a lot, he can try to help out next week.
So candlestick patterns for next week.
Does that
Wait,
sound good with everybody?
we doing a wait. So wait, y'all got the Candlestick Trading Bible, right?
Yeah.
Right.
Okay.
Yeah, we
All right.
posted in the homework help.
All right. I was just making sure.
Yes, sir.
So yeah, we'll put something together and we'll go over the candlestick patterns for next week, and we'll break them down. Like I said before, the names and different stuff like what they mean as far as like bullish or bearish.
Right. All right. That sounds like a good idea. Let's see, before we finish here, Steve-O might want to point out maybe one or two on a most recent chart here.
Oh, ooh, this a lot of stuff.
If not, no worries, because we still
I
got
like
next
I like to
weekend.
follow. Like I say though, like my favorite one have it been the evening star and the morning star, but you gotta wait for confirmation. Cause like some people think that I think that this a morning star, but that's why I always let my candles close and see what's going on. And just like I say, if this stays as an inside bar when it open, I'll wait till this one close too. I like the engulfing bars too. That's what this was. It's say outside bar. And the outside bar is basically when this candle right here takes over this candle. Well, when it takes over the candle before the previous one. I like engulfings because usually, oh,
If you look on my screen, I threw up something
usually
what Danny was just talking about with the engulfing.
definitely another pattern I like. That's basically an outside bar too. When people hear outside bar, that's all it is. That next candle cover that whole candle. And if they was reversed, then it'll be an inside bar because that candle stayed inside of that one.
And it's called a harami or something like that.
So what now?
In the Bible, I think it's called the Bullish harami or Bearish harami, something like that.
Oh, the little small one at the bottom.
Yeah.
Yeah, that's why I say it's if it's at the top, then it's berries. If it's at the bottom, then it's yes a Hammurabi. Hammurabi bullish. I'm glad I read that book because I used to be scared of those little green candles all the way at the bottom. I ain't think it'd go up.
All right, so I guess that's pretty much it. Cool. Wraps close stuff out.
Sounds good. That's a wrap on the first session
I say
for Steve-O.
anybody want to go over trades or anything, any questions, inbox me or Luciano.
And during the week, in the premium section, we do it a lot too. So if you guys want to subscribe to this Discord, to the premium section, that will definitely up your game. You'll be able to get Steve-O and Lucy's help a lot more. Luciano.
Thank y'all for teaching today's class.
Yep.
Thank you. Appreciate it. We appreciate y'all coming to our first class, and hopefully they get better as we go.
Well, I'm still gonna come to every one of them.
Appreciate
I
y'all.
appreciate
We
you, for
appreciate the
real.
support.
I see you dedicated.
Like, yeah, it's time to get better now. I've been playing for too long. Like, I need to stop playing with my own potential.
Facts.
I think we'll try to add
Millie, you still on here?
Of course, front row and center, baby.
You trying to go? You trying to go with some trades tonight, Luciano? You trying to go with some trades?
Yeah, we can go over some stuff. Could look into it for the week. I got some earnings coming up too.
Yeah, that's whatever. Yeah, we in the lounge with it.
Yeah, we can move over to the lounge.
All right, bet. Shit, I'm over there.
Thank you everybody for showing up. We'll be here same time next week. We might add Millie on for him to talk a little bit about those candlestick patterns.
I will say I'm a beginner just like everybody else still, but
yeah,
I done got better with my percentages and stuff. Like I'm good at what I do because I scalp. I don't swing. Y'all got any advices and knowledge y'all want to give me? Hey, I'm open to all ears.
Yeah,
Just
definitely.
like if anybody got any questions for me, hey, I'm gonna try my best to help you.
And if y'all could drop like some suggestions on like how we could make the classes better, or like keep y'all more in tuned or stuff like that, definitely leave those comments so we could read through them and go over them and try to make this like a better learning experience for everybody. Hopefully, like maybe start getting some activities in and stuff, trying to get people more involved.
Yeah, we really weren't prepared. I've been on the highway. I couldn't even get prepared.
All right, I think that's it. Look forward to the next little event. You'll see it up at the top of this little left side here. I'll create a new one for next week. Just look forward to that and click your little interest. It should remind you when the day comes. All right. Good night, everybody.
All right.
All right.
Yeah, like when I go on this, you could play your stuff and stuff. It's just gonna be me and a couple people just talking trades.
Still flat.